Hi, today we are going to discuss about LTF model with 5-point checklist. Before taking any trades, we need to align our trades with HTF trend. If you see in this example, the price is continuously creating 4-hour fair value gap, bearish. So we should not trade against the trend. We just need to look for bearish entries. We should align our trades with HTF key level and we should take only bearish trades. So now we are going to discuss about 5 points of checklist before taking any trades. First one, price reaches to an important level which is HTF key level or HTF fair value gap, which is it will start from monthly, weekly, daily and 4-hour. Second, create swing high. Third, right swing high. Fourth, reverses and closes below order block. Fifth, order block supports price lower. So as I told earlier, before taking any trades, we need to mark HTF key level or HTF fair value gap on the charts. In this example, we have bearish daily fair value gap. So this is our first point. We need to wait for the price to reach to this level. First one, price reaches to an important level. Second one, the moment it made a low, this high becomes swing high and price right swing high. This is third point. Then suddenly it reverses and closes below the open of consecutive up close candles, which is order block. Then fifth, when the price tries to go up, this order block supports price lower. Yeah, these are the 5 points we need to have in as our checklist. As I told earlier, in bearish condition, whenever the price closes below the open, whenever it tries to go up, these consecutive up close candles will restrict the price to go up. So again, I am repeating the same thing. Before taking any trades, we need to align our trades with HTF key level, which is daily fair value gap in this example. This is our first point, which is key level. Second one is it should have swing high. Then it should ride that swing high. And if it reverses and closes below the last consecutive up close candles, it will be order block. When price goes back again, this order block will restrict the price. Here we have two entries, which is our first entry, this order block. If you see here, OB entry 1. Second entry is here. If you see here, this have consecutive up close candles and price closed below the green candles. This is order block. And second one is fair value gap. If you notice, these two have formed at the same location. So this is high probability entry, which is unicorn. Fair value gap plus order block. See, as soon as the price reaches to this fair value gap, it started its momentum in bearish direction and took the nearest swing low. That's it. I'll show you one more example. If you see here, which is 15 minutes time frame, order flow is bearish, means trend is bearish. Why? The price is continuously creating 4-hour fair value gap, which is HTF fair value gap. So we should not take bullish trades in this scenario. We always should look for bearish shutups. If you notice here, this is actually weekly fair value gap. Price reaches to important level, create swing high, right swing high, suddenly reverses and closes below the continuous up close candles, and order block supports the price lower. This is our first trade. And again, same thing. Price reaches to an important level, creates swing high, right swing high, and closes below the order block. Order block supports the price lower. Again, this is 4-hour fair value gap. Again, same. This is our important level. Price reaches to an level, creates swing high and right swing high, and reverses and closes below the consecutive up close candles. Order block supports the price lower. See, in this example, which is 4-hour fair value gap, and current time frame is 3 minutes. As soon as the price reaches to an important level, we should shift to lower time frames. It will start from 15 minutes. Price reaches to an important level, create swing high, right swing high, reverses and closes below the order block. Order block supports the price lower. If you see here, I have marked only the last up close candle as a order block, but which is not correct. We need to consider last up close candles as a order block. Because of that, I missed a entry. Waited for the price to hit this level to get an entry, but the price didn't reach it. Because I need to mark this last up close candles as a order block. Then I have made a huge profit on this day. See, after touching this order block, see how the price reacted. So I'm repeating the same thing again. When the price reaches to important level, we need to shift to lower time frames and look for these 5-point checklist. In this example, 4-hour fair value gap is our important level. Second, it has to create swing high. When this low made, this will become swing high and price right swing high. So this is like liquidity sweep, as we discussed earlier in all videos. This is liquidity sweep. Then suddenly reverses and closes below the last up close candles. As I told earlier, when the price closes below the open of consecutive up close candles, it will become order block and it will restrict the price to go up. So when the price went up above, this order block starts restricting the price and it starts trending downside as expected. That's it. Thank you.